Welcome everyone to Vested Interest. This is Shane back for our last stock pick of the day video for the week. It is Thursday, March 6th. We're going to take a look at Owens Corning. This is out of the industrial sector. Now, before we get too far in the video, if you could do me a big favor, it doesn't take but a couple seconds of your time, and it really does help a small YouTube channel like mine grow. It helps with the YouTube algorithm. It helps to spread the videos a little bit further. Hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that subscribe button down below. Hit that notification bell so you're notified whenever I put out any new content. I do this stock pick of the day video series Monday through Thursday whenever the market's open. We take a look at a company's stock that's pulled back on the day, run it through my screener, and see if it makes it onto my watch list. Now, sometimes we look at businesses that are already in my portfolio. Owens Corning is one that fits that description. I am long Owens Corning. I do have a position, and we are using this as a kind of a back check to make sure it still is okay, or do we need to do more of a deep dive into the financials and make sure the company is not having trouble. So there's the thanks button down below as well. If anyone would like to buy me a cup of coffee, that is one way to help out the channel financially. Really appreciate everyone out there who's taking the time to watch, comment, like the videos, and share the videos with anyone you think that might find value in the content as well. That's another way to help out the channel and spread the videos. Really appreciate everyone out there. Now, this is the Vested Interest Stock Screener. You can pause this and feel free to tweak this and make it your own. Don't blindly just follow my screener. If you have other criteria that you like better, go ahead and swap it out. This just gives you an idea of what I look for on a high level. It is not a deep dive into the financials of the company. This is an initial screener, and that's what it's for, to tell me whether or not out of the thousands of stocks out there in the stock market, I want to take the time to do more of a deep dive into the financials. It must meet 5 of 8 to make it onto my watch list, or 6 of 9 if it was a company out of the financial sector like a bank, insurance company. I throw in price to book. You can use price to book for any company, just don't blindly use one as fair value. That really is for financial companies, specifically for banks and insurance companies. All right, back to Owens Corning. Check them out at their homepage, www.owenscorning.com. That's www.owenscorning.com. www.owenscorning.com. That is their homepage where I pull this information from. Our story is not simple, a history of installation or building supplies or even the dates of inventions and buildings. It's an intricate tale of innovation and growth spurred by reinvention, curiosity, and strong partnerships built over decades. Our roots reach back to an 1800s lab experiment that, through an unexpected twist, produced mineral wool insulation. Might be in your walls today, right at your home. That's the insulation that's probably, like I said, in your walls. If it's not from Owens Corning, it's definitely from another company. And you might have spray insulation or something else, but mineral wool is the most common even today. This set off a wave of innovation for what would in time become the insulation industry we lead today. Over the decades that followed, we experimented with glass, partnering with organizations along the way to develop new applications and production methods for our innovative products. At the turn of the 20th century, glass manufacturing was focused on containers. By the 1920s, Owens Bottle Machine Company had a strong foothold in bottling. However, the advent of U.S. prohibition of the Great Depression brought a series of challenges that drove the exploration of glass's other capabilities. Experiments with glass fibers led to products such as glass block and notably the first glass mineral wool insulation. This convergence of glass and insulation led two of America's then leading glassworks companies, Corning Glassworks and Owings, Illinois, to form a partnership in 1935 to share knowledge and cost to explore fiberglass developments. The partnership produced a variety of new materials, processes, and applications in glass and insulation, and in 1938, the Owens Corning Fiberglass Corporation was officially formed. And that is really their bread and butter today, still building products, insulation, shingles, other building products and materials. Like I said, maybe in your home today that you don't even realize it, maybe in the office building that you work at. You can read through the rest of this or go check them out on their homepage for more information. All right, and the reason we are looking at them today, down 2.28% on the day, we are talking about Owens Corning, ticker OC, out of the industrial sector. Closed out the day at $145.56. 52-week range as low as $140.94, as high as $214.53. So they are very close to their 52-week low here, definitely within 15%. I think it was $154 or $153 or below is within 15% of a 52-week low. market cap of 12.451 billion, a beta of 1.52. So they are more volatile than the overall market. You can see that volatility here, and I have been trying to use that volatility to my advantage, buying them whenever they're close to their 52-week low or dropping within my buy price, and then holding as they run up. I've been up as much as 90% on this company. I think right now I'm up a little under 30%. We'll see that here in a little bit. Beta of 1.52, again, more volatile than the overall market. PE ratio, price to earnings ratio is $19.75 per share. Earnings per share is $7.37 per share. Earnings date coming up sometime at the end of April, April 22nd through April 28th, sometime in that window there. Forward dividend is $2.76. Dividend yield is a little low, 1.85% on this one. Ex-dividend date of March 10th, 2025. So that is coming up next week, Monday. So you want to buy them before this dividend date, ex-dividend date here. So that's really tomorrow, because tomorrow is what, the 7th? Yeah, 8th, 9th would be Saturday, Sunday, and then 10th would be the ex-dividend date next Monday. So if you're interested in this company, you need to be buying tomorrow to be able to get the next dividend payout ratio. 1-year target estimate of $197. Doesn't look like they see them getting back to their 52-week high, at least according to Yahoo Finance. We mentioned their ex-dividend date was March 10th. Looks like they're going to pay out April 10th. Looking forward to that dividend on my end. Now, taking a look at dividend yield to see if this one is potentially undervalued, we look at their 5-year dividend yield average, 1.41%. We compare it to their current 1.85, or over here where it says forward, 1.85, same number. Since it is higher than their 5-year average, that speaks to undervaluation, at least according to dividend yield theory. Payout ratio is low, 33.79%. I like anything under 75%. Dropping down, I like growing free cash flow over time, because typically if a company has growing free cash flow, they can do some things with those funds from free cash flow. They can pay down debt, make acquisitions, reinvest back into the company, buy back shares, pay a dividend, which this company does, and raise that dividend over time, right? And we want that dividend to be safe, plenty of growing free cash flow, as well as a low payout ratio. Again, I like under 75%. But jumping back to free cash flow, December 2021 here, you can see $1 billion in free cash flow. 2022, 1.3 billion. So a jump up there in 2022. Looks like a little bit of a downturn in 2023 to 1.1 billion, and 2024 back up a little bit to 1.2 billion. Though we really need to look at the repurchase of capital shares here, because it does fluctuate. Looks like with their free cash flow fluctuation, 570 million in shares taken out of the market in 2021. 2022 was up to 795 million. So their free cash flow was up and the repurchase of shares was up. Dropped down again in 2023 with free cash flow, repurchase of shares dropped down a little bit to 657 million, and further drop in repurchase of capital shares here in 2024, 491 million. So I like that they're pulling out shares of the market, but we do not see steady growth in free cash flow. A little bit of up and down, which is common for a company like this. They are a cyclical company. They are going to be in line with kind of the building market. Whenever a lot of new homes are being built, companies like this do very well because they provide the products that builders need to build the homes. And that's not only homes, but resident commercial space as well, right? Your office buildings, that sort of thing as well. But they are going to be a bit cyclical. So not surprising to see that free cash flow is up and down. Now, jumping over to stockanalysis.com, this is another source I go to for information, and I do recommend more than one source so you can make sure the information you are getting is accurate and up to date. They have 11 analysts that have taken a look at this. They call it a consensus buy. Low estimate of $176. Currently sits much lower than their lowest estimate, so if it was to come back up to 176, that would represent an 18.16% increase from where it currently sits. Average estimate of $204.18, pretty close to what we saw with Yahoo Finance on the previous page, a little bit higher. That would represent a 37.08% increase, and a high estimate of $235 would represent a 57.77% increase, and all the while you could collect that 1.8% dividend yield. Now, jumping into statistics, I like to look at return on equity and return on invested capital to see how well a company is reinvesting its funds back into itself. And I like 10% or better for both of these metrics. Return on equity is sitting at 12.53, above the 10% I'm looking for there. Return on invested capital at 12.34, above the 10% I'm looking for there. Got to get both of them, so it would get a check here. Now, they did not have earnings per share growth listed. I like 5% or better forecasted over the next 5 years. They didn't have revenue growth forecasted either. Looking at their, well, let's look at my position first, then we'll look at their history. I am long, again, Owens Corning. I have a 62.4763 shares. I am up 28.76%. My cost basis is pretty low at $113.08. This is one I'm looking to add to while it's down close to its 52-week low. So I may be adding a little bit here over the next couple of weeks. It was not on my stocks to watch list for March, but it has fallen back under my buy range, so it will be added to that list going forward. This one is one I would love to get to 100 shares right now while it's pretty close to its 52-week low. Obviously, that would bring up my cost basis a little bit, but I don't mind that in the long run. A quarterly payer here, again, payout ratio low. They're saying 37.45%, so a little bit higher than what Yahoo Finance had it hit at, still under the 75% that I'm looking for, well under. Now, dividend growth is extremely fast. Very aggressive dividend growth here, 15.18%. Very nice to see. 6 years of growth. Buyback yield is positive at 3.52%. So it tells me when they are buying back shares, they're doing it opportune times whenever the shares are relatively cheap. Shareholder yield positive at 5.38%. They do pay off off schedule than most companies do, January, April, August, November timeframe. So I like that also. It helps balance out my portfolio as far as payouts go. October 2022 here, they were paying 35 cents. They raised that up January 2023 to 52 cents, raised it up again January 2024 up to 60 cents. Most recent raise was this January 2025 raise. So this one was just a couple months ago, up to 69 cents. And that's where it remains. And I would anticipate their next dividend raise will be in January of 2026. And I'd love them to maintain this 15% dividend growth. We'll see. All right, let's check out the screener here. In the business, that's where we started. Again, they are providing construction materials, primarily insulation, but also shingles and several other construction products. Growing free cash flow over the last 4 years, a bit up and down. Again, cyclical in nature. This company is around the building sector. So whenever things are being built, homes, commercial space, they're doing well. Whenever things start to pull back or if we enter recession, typically they have a bit of a downturn. Growing dividend, yes, double-digit dividend growth here. Dividend payout ratio is way under 75%. It's actually under 40%, so check there. Dividend yield theory says they're potentially undervalued, so check there. It is within 15% of a 52-week low, so check there. Return on invested capital, return on equity, both over 10%, so check there. Nothing listed for EPS growth, so it did not meet the 5% or better, though if I was to look for another source, maybe it does. I just didn't do that for this one. But 1, 2, 3, 4, 5, 6 out of 8. If this wasn't in my portfolio, it would definitely make it onto my watch list. I am not concerned with this company. I did look at their little bit into their financials here recently. That's why I want to add more while it is currently pulled back. Let me know what you think of Owens Corning in the comment section down below. Is it one in your portfolio? Is it one you're looking to add to? Maybe you're part of the reason it's dropping. Is it one you're selling right now? All right, that's it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you think of the video. Let me know what you think of Owens Corning. Again, is it in your portfolio? Is it on your watch list? Is it one you are looking to buy or already hold? I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Owens Corning you'd like me to cover in the Stock Pick of the Day series, drop it in the comment section down below. I'll try to work into the rotation. A lot of companies pulled back right now. Make sure you're getting out there in the market, looking at companies you want to buy, figuring out a good price to buy them, and waiting for them to hit those buy prices or fall in the range of those buy prices. A lot of pullbacks recently. I don't think that we are out of the woods. I think it is going to be a downtrend here for the foreseeable future, at least until we get the tariff issues figured out, jobs issues with all the layoffs going on, whatever you think of the federal jobs out there. They do impact not only federal jobs, but other jobs. I've seen the estimates that each federal job actually supports 8 to 10 jobs in the private sector. So they do definitely impact more than just the federal government expenditures. So keep that in mind. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we'll see you in the next one, which will most likely be the portfolio. Well, we didn't do the dividends paid for February, so maybe we'll do the dividends paid for February update, kind of wrap up February, and then Sunday, maybe we do that one Saturday, and then Sunday we've got our weekly portfolio updates. Tune back in for that one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing in educational and entertainment purposes. Invest involves risk. You can't lose money, so never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.